Hello, everyone, and welcome to the Shades of Entrepreneurship. This is your host, Mr. Gabriel Flores. Today, I'm here with Adam Penner from Mask Zero. Adam, how are we doing?
I'm doing great. Thanks for having me on, Gabriel. It's fun to be here.
Yeah, I'm excited. Me and Adam actually met during kind of a networking event for the nonprofit Latino founders. You can learn more about that. Check out latinofounder.com. But yeah, we kind of met from there. We started a little chat, told him about this podcast. I was like, you know what? He told me about his product he was doing. I was like, you got to come on and tell me more about this. But before we get into all of that, Adam, give us a background. Who is Adam? Give us some insight, kind of your backstory and what you've been up to.
Yeah. I'm gonna give the higher level version. People can always find me on LinkedIn as well, and through the other usual sources in the marketplace. Um, Short form, I am a what is known as a serial entrepreneur. I am also what a lot of people refer to as moonshotters, right? So I take very big swings in the marketplace. I'm not the guy who owns the restaurant or the yoga studio. Entrepreneurship takes a tremendous amount of work, and it stems from the Latin for risk. So it's a risk taker, quite literally. And something I've done throughout my career accidentally. I actually started in national security as an analyst and a research uh, guy. So a lot of my work is rooted in some of the things I learned early in my career, which is you got to kick the tires, how to do diligence. I've been on both sides of the table, so I've thought as a investor and I've thought as a business person. I understand risk very well. My claim to fame, if you will, is that after 9/11, we created a SaaS model whereby we identified every publicly traded company that was doing business in terrorist sponsoring states. And it kicked off a national divestment campaign to keep oil money from coming out of the ground in places like Iran and some other bad guy countries. George Clooney jumped in at some point because of Sudan and the slavery issue over there became a national hit. I was a business person in all of it, but we became personalities. I will say something I'm very proud of. We took about $50 billion out of bad guy coffers. And that's according to independent sources. I learned to be a businessman, business person, and ultimately moved on from that particular venture. Got into a logistics disruption technology, which I'm very excited about. It's a sustainable way to transport goods and products. We were very, very early on that. It's still about 5 years away from taking over the world. But that was a great learning experience. And then during COVID, I decided to hang my own shingle and take positions in a number of entrepreneurial startups, including what we're here to talk about today, Mass Zero. So, and behind every great entrepreneur, I should say, I have an incredible wife who and children who are supportive of all of this and have survived the roller coaster with me. So, wouldn't be here without them. They're the backbone.
Absolutely. I got to tell you, my wife as well, and my two kids, it's like the amount of crazy hours and times we put them through. I mean, I don't know how many times I've been down in this basement, after hours while she's giving the kids a bath and getting ready for dinner and getting things done.
I mean,
It's just constant, definitely. Now, Adam, one of the things you mentioned, which was very interesting, was a lot about risk. So in business, there is a lot of risk, especially in entrepreneurship and understanding it, evaluating it, really creating like a risk corridor essentially to kind of know. Talk about how you approach one, how do you define risk? And then two, how do you approach it from a business perspective?
yeah, that's a great one. And let's put some numbers around it, right?
Let's do it.
Because
Yes.
these numbers are floating around out there. And I always caution people, you don't take investment advice from people who are on LinkedIn. So be very careful about who you're taking advice from when you're looking at folks who claim to be experts in startups. They're selling services at the end of the day, right? And they're selling them through a very curated platform. So always want to encourage people to really think through things. The fact of the matter is that it's a difficult world. 9 out of 10 startups fail. The reason for that is there's an extraordinary gap between startup and revenue, and nobody is funding that. So the VCs of the world, the seed funders, are not filling that, and government is having a slow time catching up. So when you think about it in terms of 9 out of 10 entities that you look at, whether as an investor or as a business person, whether you want to involve your time in this, right? It's going to fail more often than not. The number of founders who succeed are exponentially higher when you get into their second or third time. Just like you see quarterbacks in the NFL who don't cut it during their rookie season, but now you got a Sam Darnold out in Minnesota who's on his third team and he's doing great. He's going to get a payday out of it, right? Same thing with founders. You learn as you go. So here's how I define risk. I define risk very specifically as, do I believe that it is commercially viable, and do I have evidence that can defend it as commercially viable? Because what I am putting at risk is my opportunity cost of working for a company that's going to give me a 401k and is going to pay me to wake up every morning. And to your point, is not going to call me between the hours of 5 o'clock p.m. and 8:30 the next morning, right? Because all that goes out the door. You're talking about a child here, right? That baby is always needs attention, food, money, like all these fun things, right? So that's how I think of risk, which is, frankly, I tend to think of it in terms of what does total loss look like? Like if I experience a total loss on something, how am I going to feel about it? What does it look like? Um, Gabriel, okay, you froze up, but I see you're still there nodding. And then how do I then put it into context in a business situation? The answer is I pass on the vast majority of opportunities, right? I need to believe that it's going to be accretive very quickly. I want to see revenue. I want to understand how I'm going to get there. And I very, very much want to understand the exit. So for me, as an entrepreneur, I'm not looking at a lifestyle company. I'm not looking for somebody who wants to do this on the side or those kinds of things. I'm looking for out in two. Within 2 years, I'm done. I'm gone. I'm off. And you know about all this as well. I mean, you have a business plan at Latino Founder. You have an idea of how you're going to grow it, scale it, turn it into a national powerhouse. That's exciting to me,
Yeah,
right?
it's very funny because we're actually to that point, we're trying to fill that void, that funding void right there where the seed VCs aren't in, right?
Yep. Yeah, no, that's exactly what you're doing is you figured out a very interesting way to do that for early stage companies, and you're following a very interesting VC type of model, which is that you've got numbers, right? If you look at it from a deal flow perspective, any cohort that you have has 15 to 30 companies, one or two of those is going to be successful, right?
Correct. Yeah.
Um, and some of them might be successful just on a smaller scale. They might turn into a family business, which is great. But you go back to what's the definition of risk? The definition to risk to me is getting into a perpetual lifestyle company that neither succeeds nor fails and just kind of dings around for 15 years, because then I've just spent 15 years of my life in that situation and haven't seen a lot of upside from it.
That's a great point. And I love that you mentioned the failure rate, unfortunately, of the small business world. And that's why, what you mentioned with Latino Founders, a nonprofit. If you want to learn more about it, folks, latinofounder.com. Really, our goal is to help scale 100 Latino businesses to $1 million recurring revenue. Now, the $1 million piece, it's actually very strategic as well, because we know once you kind of get to that $1 million of annual recurring revenue, you can now pay your employees a competitive wage, and you can now pay yourself, the CEO, the founder, a market wage. And so that's kind of the baseline, right? And we want to get to that foundational level, because now when we get to that foundational level, now we can kind of start talking about scaling and creating generational wealth for yourself and your family, right? But you kind of have to get to that mark where you feel comfortable, because like you mentioned, you might find yourself in a company where you've been doing it for 15 years, just kind of putting around, but not really going anywhere, right?
Yes, that's the flip side of it, right? I mean, I always tell my wife, I could get a job working for some company that doesn't give you any sort of security necessarily. I mean, it's different. It doesn't give you a lot of flexibility, especially if you have children. But if you're going to go down the entrepreneurial road, there's going to be a lot of thorns along the way. There's a lot of obstacles you're going to have to navigate. It's one of the things, Gabriel, we've talked about this. We met through Juan over at Latino Founders. And it's one of the things I quite respect about Juan and you and the board have built over there is you're approaching it from a metrics basis with a specific goal. And so, again, another word of advice to entrepreneurs who are listening to this: a lot of people are going to say a lot of things, right? Kick the tires. Like what Gabriel just said is extraordinarily important. They are looking to build companies to an AAR, right? Annual average revenue of $1 million per year. Why? Because he knows that a fair profit margin is going to be about 20, 25%,
Yep.
right?
Yep.
And he knows what the operational costs are going to be that are going to allow him to pay those important scales. So here's an entity that is looking to help entrepreneurs versus an entity out there that's an accelerator. That in what's their mandate? Is their mandate just to throw money at some things, tick some boxes, and hope that one of them hits? So again, as you're going down this road, you're almost inevitably, unless you have a trust fund, going to need money and resources. And there's only a couple ways to do that. One is to work with a great group in your community, or with an accelerator, or maybe someone from your university. A lot of universities these days have incubators
Yes, that's
and
true.
have resources. A lot of states are trying to fill that gap from a funding basis early stage. But it's like anything else. It's buyer beware, right? So, like anything else in life, just make sure you know who you're doing business with and surround yourself with people who can give you good advice and have good intentions.
And I feel like that's also the same kind of approach from an investment perspective. So now I want you to take off your entrepreneurship hat and I want you to put on that investment hat. Now, when
Yeah.
you kind of like, let's say you're going through the process, you found a viable business, like you mentioned, right? You go through your risk kind of variation, and you determine, okay, this is a viable that can bring a commercial. What now do you take me through your thought process when you're determining whether or not you should invest in a company. One of the things you also mentioned was you don't want to work with an entrepreneur that's just doing this part time. You got to be in it for real. So we know that. Now talk about some of the other variables you kind of think about when you're looking at investing in a company.
Yeah, there's I like my sports analogy, so I'm going to come back to it
I
as
love sports by
well.
all means.
Like with the NFL. So at the end of the day, do you have a top five quarterback? Because if you don't, you're probably not winning the Super Bowl. But also, and this is extraordinarily important, do you have a top five coach? Right? There's 30 teams in the NFL, 32. You need to have those sets of ingredients, right? And you know that you need those sets of ingredients. Now, you need a lot of other things as well, including luck. But what are your core ingredients? So I have core ingredients that I look for when I invest, which takes the form of a partnership, right? So, like a marriage, I need to know that this is somebody that I can work with. So I'm going to put them through a lot of rigor, and I'm going to even want to see some meetings. I'm going to want to sit in on some things. I'm going to ask them extraordinarily uncomfortable questions, because when you get into a marriage, you're going to get into uncomfortable situations, right? You're going to hit
Yeah,
speed
very
bumps
true.
and do other things. So to me, the founder is a lot like the quarterback, right? Is it somebody I can work with? Is it somebody who I can teach, who can teach me some things as well? Because I'm often in different industries. I want to learn from them and understand. I was just at a meeting this morning with someone who's got a AI technology that's actually selling in the marketplace, right? It's a platform. It's here in Portland where we are. Um, and he was able to explain it to me. And that's important because I often take a role selling. I want to know, can I sell it, right? Do I really believe that I can sell it? And then I want to know, like, the head coach equivalent, and might be even better, like more from an ownership perspective, is, who for me who's on the board? Do we have good, smart people whose intentions are correct and are willing to pick up the phone and move things along, because the network is your net worth, right?
Yeah, very
So
true.
I need to know if I can get in there and do those things. So it's a lot less about the numbers for me. Numbers are make believe early on, right? It's more about, do I believe the story on scalability? And that goes back to my interest in working on projects that are worth it. That at the end of the day, if you are able to be one of those 1 in 10, there's a payday there, because again, it's not that, and I have a lot of respect for mom and pops, but they are exactly that. They're not trying to reach the point that it would interest an outside investor. They have a family business that they're trying to make a good income for themselves, and maybe it's a restaurant or whatnot, and put their kids through college. I respect that. That's the
Yep.
backbone of our
Very true.
country, 100%. Just from an investment perspective, it's not really what I'm looking for. I'm looking for scalability.
Yeah, and it's difficult to, like the food and beverage industry, and particularly the food, like the restaurant, the bar scenes. Those are difficult services to scale, right? It's a very unique thing to try to scale. However, some of the things you do, right, with various patents and things of that nature, those are very, very scalable. Now, tell us about some of your work in that world as well, because I believe you do have some patents, in particular with the Mass Zero. So tell us about kind of what does it take? What do you have to kind of go through to get
Yep.
approved? And what patents do you currently have?
It's a great question. I did not wake up. Funny story. I'll give you a little anecdote. I at one point nearly gave my dad a heart attack because I was admitted into a top 5 law school in the country, and I went there. And about 2 weeks into it, I realized that I had absolutely zero interest in being a lawyer. And so I left, and I made a financial decision, right? Because I could have stayed, but you're talking about $100,000 in loans that you're paying. People pay these into their 40s, right? And you are absolutely committed to that for the rest of your life. So I talked earlier about flexibility. Um, so I left before the first semester cured, which would have been $25,000, and I would have been pot committed at that point. I would have almost had to have stayed. And it's not to say that I wouldn't have made a decent lawyer. It's just to say that it didn't have an interest for me. It turned out to be the right move for me. The irony of that is that I have worked on over 120 patents that around the world over the last 15 years, and my secret sauce is that I have an incredible patent attorney, and never skimped on that. So I work with a great patent attorney at Dorsey and Whitney, which is known worldwide. I've learned a lot about it, enough to be dangerous, but also enough to know that if something needs to be patented, I call Gina. Gina, I hope your phone rings off the hook on this. I'm always happy to give you a referral. Gina's made partner. But yeah. So long story short, with this particular product, I want to be clear about this. I don't have any patents. I'm not an inventor. I work with a lot of inventors, and I work with a lot of founders. Intellectual property is extraordinarily important because it creates a baseline through which to raise capital, right? So you now have an asset. Is it asset backed like your house? No. Is it asset backed from the perspective that the intellectual property has intrinsic value? 100%. And Mass Zero is a great example, right? So if Mass Zero never commercializes and we have to sell the technology to the highest bidder, somebody's going to want to own that intellectual property, because we did it not only in the United States, but we did it on a global basis. So we've created a baseline. And from an investment perspective, why is that important? If somebody came in and invested $2 million in a restaurant, which is not unheard of, like there's many restaurants that get investment for that level, and it goes under, it's gone. There's nothing left. You sell the industrial strength refrigerator, et cetera. If Mass Zero doesn't succeed, it's going to at least sell at a point that's going to get all of its investor dollars back, right? And that's incredibly important. And that's something that I'm not great at self promotion, but I'm going to pitch myself on this right now. I have never lost investors' money, period, and I never will. And that's because I take on projects that have intrinsic value that I know I can either commercialize, or if I can't commercialize, the technology itself has value that can break even, right? And get to that point. So usually we succeed in commercializing, right? I prefer that route. And I think Mass Zero will as well. Mass Zero has a patent, and I called Gina during COVID when I heard about this from a former attorney of mine at another company. And he knew an inventor named Trevor Chandler, who has become a friend and a business partner, along with Randy, who connected us during COVID. And when I heard what he had come up with, I said, immediately we need to figure out if someone's had to have patented this. So that's the first question you ask, right? Do you really have something that's
Yeah.
novel? And as it turns out, so I called her on the Sunday of Memorial Day weekend during COVID. She called me back the next day. Within 2 weeks, we formed the company and we all threw in the money to gain the patent. And as it turns out, we beat two Fortune 500 companies to that exact same discovery by about a month and a half. So it was a race, literally. But what the patent covers is the use of UVC, which is ultraviolet in the C range, right? Which has been known for many years to kill virus. What nobody had ever thought about till Trevor thought about this is, could that be harnessed in a wearable, all in one mask and visor protective shield in a sealed but not zero pressure sort of way? So it's not a respirator, it is a seal more like you would have on a scuba mask. And the net result of all of that is Mass Zero, which has a patent in the United States as a utility patent. And we now have patents in pretty much every important economy around the world, with the EU pending at this stage.
Wow. It's really interesting because one of the things you said is you're a serial entrepreneur. You've been in so many different markets, right? In various verticals.
Yeah.
How do you, and one of the things you're also looking at, which is I thought was really interesting, is you really kind of started talking about the exit strategy at the beginning. It's almost like you're planning the exit very, very soon. How does that exit planning differ based off of your verticals, or is your exit strategy relatively still the same based on no matter what market it is?
Yeah, the exit strategy is almost it's like DNA. It's like 99.9%, no matter who you are looking at it, when you're talking to them on a Zoom, you and I share a lot of DNA, right? As humans. Um, the DNA of an exit is important. I go back to the founder on that as well, though. I want the vision, right? I want to see how do we get from where we are today to somebody writing a really big check. Because if I can't get to that vision, right, what it tells me is that I have a founder who just wants to do this. So maybe they're raising money to like give themselves another couple years, or is just waiting around for it to, or is very happy to collect $150,000 salary for X period of time and wants to, it's a lifestyle thing. I use that term appropriately. And again, no disrespect to those people. They're making a living, they're doing well, they're putting their kids through college. They're no different than, somebody who might buy a 7-Eleven or
Yeah, very
something
true.
and put the work in. It's just a little bit different. I don't want my money or people I know to put money into something that doesn't have the intent of returning on investment, that ROI. So, very early on in my career, when I was raising money for my first company, I did a deck and I met with people and they just butchered it, and that was fantastic, right? Where's the exit slide, Adam? Where's the ROI? Show me the numbers. Where's the pro forma? Just all these things that, like I said, once you've got the scars to prove it, I can just spit these things out all day. I can look at a deck and know within 2 minutes whether or not I want to have a next conversation. If I want to have a next conversation, usually what I'm going to do is tear that deck apart, because ultimately it's going to be me who's presenting it to people, right? I've raised about $30 million for all my ventures over the course of my career. That doesn't include some nonprofits that I've been involved with as well. Um, you know, I, eh, if an investor is going to, well, sorry, let me say this. The exit is important because an investor is not here to go along for your ride for the rest of your life. The investor wants a period of time, and they want to know what they're going to get in return, and they want to know what their downside risk is, and they very importantly want to know, what does the upside look like? Does it look like a 3x or does it look like a 30x? Because that's going to change their thought process. So to me, if you start at the end of the story, like, I think I've never written a book, but I think if you write a book, you know how it ends. And then
Yeah.
you build, then you create the outline and build the story up until that, or a movie, right? Here's how the movie ends. It's the same with a business. All we're talking about is a story, right? So I want to know how the story ends. And now I have to work backwards to see if I believe that we can get there.
I love that, and it's that's really how you do a pitch as well, right? When you're pitching your business, it's imperative to have your forecasting, but it's also important to support that data, with your historical trends, right? So, hey, these are the sales I had the last 5 years. Okay, well, based off of that 5 years, now I can project where I'm going to be at, the next 5 years, and that's very important. And one of the things I really am very interested in knowing is you talked about coming into this and you have a lot of battle scars, right? So you have a lot of experience. What would you say was probably one of your most valuable experience that you learned throughout your entrepreneurship journey that's really helped you be successful?
Oh, that is a fantastic question because I could go on for hours and days, and books and other things. I can look at that in two. I'm going to answer that question in two different ways.
Perfect.
The first way I'm going to answer that is in terms of self care. Um, so the several weeks ago, a very prominent entrepreneur committed suicide. And he was a great success story financially in terms of the companies that he had built. He had an incredible backstory of having grown up in Africa and the whole thing, right? And it resonated with me because there are days where it is really really dark, right? Especially if you have the weight of investor dollars or debt or other things coming to the fold. For me, it's family and being able to provide and those kinds of things. Failure is part of it, right? So, and we go back to that 9 out of 10. Even if you succeed, you're going to have failures along the trail, and they're going to hurt really bad because it's you. I mean, you are the company in a lot of ways. You're the energy. So to get to through the dark days, I always talk to young entrepreneurs about self care. I talk about running. I talk about hiking. Here in Oregon, I try to hike every day if I can. I read that through. That's a pass along from Phil Knight and Shoe Dog, right?
Yeah.
Like,
Yep.
he talked when I first read it, I'm like, why does this guy keep talking about his 6 mile run every day? Right. Well, I get it because it's sanity. What you put in your body is your fuel. Right. So if you're going to sit there and be stressed out and eat poorly. So I actually think it's not only is it really important, but it's a gauge of whether or not this is where you should be. Because if you are really at a 12 out of a 10 all the time, you're in the wrong place and you need to think about how do you get to a different place. So self-care and your relationships is extraordinarily important. The other, and that's a lesson that took me a long time to learn. Actually, so I'll show a little bit of personal information with the audience. I had a diabetes diagnosis back in 2015, and that was my wake up call. So now, I'm very careful. I don't drink. I don't, I'm very careful about what I put in my body. This is why I keep telling you at the Latino founder events, stop with the desserts. Right? There's like a whole table that
The whole damn
Juan
table.
puts out there, man. And I'm like, come on, you're killing me. And Juan's trying to give me a piece of cake. And I'm like, dude, I beat diabetes. Like, I'm really
Oh my
careful about
goodness, I
this.
love
So yeah, no, it's so a lot of fun. So the flip side of that is failure creates challenges, mental and physical. It is also the best lesson that I've ever learned. So you asked me, why am I successful? I'm successful because I absolutely got the snot kicked out of me with my first company. We had a merger that was horrific. To this day, like we mock it. We refer to it as the merger, right? Like when I'm talking to my old business partners. Um, that merger made me who I am because first it fired me. So I learned what it was like to not have income. Right. And then 3 years later, the company owed me a lot of money out of the merger. So the CEO had to fly to the West Coast to convince me to lead a debt restructuring. So I got to learn how to do a debt restructuring. And I asked the $1 million question, which is what's different? If I do this debt restructuring, why can we expect a different outcome? So that's what I would add to your deck that you mentioned earlier is not only show me the last 5 years, but show me why my money that's going in is going to lead to a different outcome over the next 5 years. What's the investment going to? What's the engine? What's the growth driver? Right? That's what I want to see. What's different? Tell me
yeah.
a new story, right? The old Bud Fox thing, right? Bud, tell me something that's different,
Yeah.
right? Um, So in this particular case, I was convinced, but I negotiated. I've called this the single most important negotiation I was ever in, because he said to me, I want to do this. And I said, okay, I want something in return. If I get this done, I'm going to free up this much capital. I want you to hire a nails business development, sales, marketing person who can juice our revenue so we can exit, right? And sure enough, he hired a gentleman named John. And the second thing I wanted out of it was a crash course. So I sat on the board at this point, but I didn't know how to juice the revenue. And I wanted to see, if it was going to succeed, I wanted to see behind the scenes. So this is
Yeah.
how I become a very good business development person, a very good marketing and sales person, because I learned how to do that through John. And sure enough, within 3 years, we turned it around and we were able to exit to a publicly traded company. And it wasn't a life, it wasn't a golden parachute, but, we all got our money back. It took 10 years from the time that we did the merger to the time that we got what we were owed from the merger. And all the investors were made whole, which was a good ending to that particular story. And I learned, but man, you want to talk about a failure? That was a bad one. That was in 2009, me having an 18-month-old kid and a wife and a house and a mortgage that we'd just gone through, lost
2008 crisis.
25% of
Yeah.
its value. You know exactly what I'm
Oh,
talking about. And laying in bed and not having a job and going, well, that was a bad decision. So my answer again is fail. And this is really important. I asked this of an entrepreneur recently because we were talking and he's raising money and he's at the end of his rope and I can see it, right? And I'm looking at him and I'm like, hey buddy, why can't you come off of this one? It's like a poker hand, right? You're like just so committed to this when clearly you're not winning this hand right now. So why can't you come off of it? Because you're only 33. Like you're going to have other opportunities. It's in your DNA. Maybe it's time to hang it up. So again, I'll go back to what I said before. Sam Darnold's on his third NFL team, right?
yeah.
Sometimes it's the right place, the right time. Just because a company fails doesn't mean that necessarily that's a reflection upon you. Have you comported yourself to the highest standard? Have you been a good steward of resources? Have you made the best decisions based on the information you had at the time? If the answer to those questions are yes, hold your head up high and your investors will respect you for that. They might not ever give you money again. That group of investors, that's the case. You might have to court different investors or kind of reinvent yourself out there. There's no shame in that. I mean, what there is shame in doing is being the last person, having the ship go under, and not looking people in the eyes, not making those phone calls and saying, hey, this is where we are, because it happens.
Yeah. Yeah. And we definitely feel that sometimes, with in the entrepreneurial ecosystem where it's very hard to kill the idea because it's your baby. Like you mentioned earlier, right? It's your entrepreneurial idea is your baby. And so sometimes people get so far down that rabbit hole. It is sometimes difficult to pull yourself away from it. And it's interesting because you kind of see the failure, right? And it's there, but it's almost like you kind of, like you mentioned it earlier, it's like you put in so much investment into time and energy and money that it's like, well, if I'm in a zero sum game if I pull out, right? What advice would you have for these individuals that are in that kind of mindset right now? What advice would you have for them?
Yeah, I'd say that's the wrong mindset, right? Because you're looking at opportunity costs going forward, and it's not worth it. Whether that opportunity cost is your health, or whether it's your mental health, or whether it's your, just having a job and cleaning some things up. I mean, it's a Dave Ramsey thing, right? Like, he's the first, and whatever you think of Dave Ramsey, politically or in terms of his system or those kinds of things, the core advice is very strong, which is that if you're not in a situation that is allowing you to pay down debt and work towards something that can grow your wealth, and grow and have you, then you're really spinning your wheels at that point. So, um, yeah, my advice is get out of the mindset. Like I think it's fear driven. So, uh, it took me a long time to understand what it really meant that, people are operating from a fear perspective, right? And a scarcity perspective. Because you hear it in the context of meditations and those kinds of things. You think, oh, is this voodoo or mumbo jumbo? It's really not. Mindset matters. Like what you say to yourself matters. I tell that to my kids, like how you wake up, the frame of mind that you have. It's why they tell you not to immediately start scrolling
Yep, it's
when you
very
wake
true.
up. So these are very important habits to do. And they're, again, unless you've done something illegal, which I'm hoping none of the listeners out there have done or got them into that sort of situation, then all you've done is really given your best. And if you've given your best and have gotten to a point that it doesn't feel successful or it's not going to make it, there's no shame in going and meeting with people. They're going to respect you for it. And there's going to be other opportunities. So, what I was going to say about fear is I think a lot of people are afraid that this is the only business idea they're ever going to have, or this is the only business opportunity they're ever going to have. That's not the case. They're going to get a job, or something's going to open up the door, right? And they're going to be having a random conversation with somebody. It's going to turn into an opportunity. So don't be afraid of that. Just if it didn't work, it didn't work, and it's like anything else. You fell off a bike one time, you
Yeah.
still learned how to ride a bike.
Yeah, yeah, it's like kind of you said, it's the habits, right? One habit I've mentioned this in a previous episode before is I'm constantly every morning I wake up and I make my bed. That's one of the things I kind of do. This morning, I did a 20-minute core exercise and 10-minute arm. So like every day, I'm trying to get about 30 minutes of exercise in, right? And one of the things you also mentioned about failure, I'm always constantly telling people I've never failed a day in my life. I either succeed or I learn. Because to me, when I say I failed, that means I give it up. I'm going to stop trying. But I'm actually learning every time I fail to so I can succeed because I'm going to accomplish whatever task I'm going to do. I might fail the first couple of times, but eventually I'm going to succeed, right? I'm going to continue to try until I get there. And then another thing I really like what you said was actually learning from others. I'm not, folks, I'm not an expert in funding. I'm not an expert in fundraising, but I'm starting to learn about that quite a bit from Edgar Navas and Juan Barraza, part of the Latino Founders team. I'm not an expert in marketing and branding. I'm starting to learn a lot from our several board members. Same with operations, and so I know where my core competencies lie. Right, the outreach, the business development piece. But now I'm also starting to get core competencies in other areas because I'm putting myself out there, because I'm putting myself in situations where I'm able to learn from other people, sitting on boards, understand, asking the $1 million questions, right? Because without those $1 million questions, you're not going to get $1 million answers. So if you're trying to not only scale your business, but if you're trying to scale yourself, asking questions, getting outside of that rabbit race, and making sure the rat race, and making sure you kind of get into the community, the actual ecosystem, you're really going to see a really good transition of success because there are so many people out there in this economy that, and especially within the Oregon entrepreneurial ecosystem, that want to see you succeed and will actually do a lot to help you, like Latino founders, like Adam and his team. And there's a lot of people out there that really will put you forward. Now, Adam, we've been talking about all the entrepreneurship stuff, and we've got a lot of sports analogies for the listeners at home. How can they connect with you if they're interested more about Mass Zero? They want to connect with you. I think you mentioned LinkedIn. Or what are other places that they can connect with you online?
Yeah, people can find me. LinkedIn is absolutely the easiest. My last name is spelled with one N, so it's Pener. I do respond to LinkedIn notes. That's always the easiest. I do have my fingers in a number of pots, if you will. So there's a number of email addresses out there. If they're curious and interested, there's not a lot about Mass Zero because it is a pre-revenue intellectual property company, but they can reach me if they want to learn more about Mass Zero, or maybe they know somebody who works at 3M and wants to buy the tech. Who
There you
knows? I'm
go.
open.
There you go.
We're always open. Um, that email address is Adam at Mask Zero, spelled like it sounds, .us. So there's a US at the end of it, Adam at Mask Zero .us. And then, one thing I would love, I can't help but think there's a lot of folks out there who watch this that are going to love this. I have been involved in a lot of industries. One of my favorite projects that I own part of the company, and we're doing a little fundraising for right now as well, because we have a scaling opportunity on it after 5 years. Took 5 years, people, to get to the point that we can actually
Yeah.
talk to people about scaling, right? To Gabriel's point, is a company called Sniper Blade Works. So it's a knife company, and it does tactical and outdoor knives for camping and those kinds of things. We love where it is. We actually just moved it from Oregon to Kansas City because Oregon's a very saturated market, and we want to be able to have access to, some interesting personalities. Sniper does a lot of cool things. To Gabriel's point, I don't know the first thing about marketing or PR, but I can learn and I
Yeah.
can hire the right people to do that, and listen to experts. So check out sniperbladeworks.com, send it to some people. I think we're doing a 10%, Christmas push right now. But if any, nothing else, you can reach out to me through that or send us a DM or whatnot. We're on Instagram and all those. It's spelled just like it sounds, sniperbladeworks.com. And thank you, Gabriel, for the opportunity to give that little plug. Can I speak to something about what you just
Of
said
course.
about the networks? If you're an entrepreneur, let me back up. My first job was the administrative assistant for somebody who was extraordinarily successful, intelligent, capable, professional, entrepreneurial, all of these things. Uh, Roger was my mentor. The first company that I talked about that we ever started was a partnership between Roger and I after 9/11. So I grew from that position to there. Why? Because I spent 3 years by his side watching what he did. How did he handle meetings? How did he handle people literally out of the blue just taking a bat and like swinging it at him? Like, these things happen in the business
Yeah.
environment. It's a dog eat dog world. How do you take the high road in a situation? How do you handle yourself when things don't go your way? Roger was an incredible, incredible mentor and friend and business partner. And so if you're very young in your career, don't be afraid to take a job that pays you to learn, and learn. Like, really learn. This is the best teaching you can get. I mean, there's one thing to get taught in a classroom. It's another to be sitting there and see, how do you put a deal together? How do you close a deal? How do you write an email 8 times so that it says exactly what you want it to say and it can't be misconstrued? How do you, after the 8th time, make sure that you call your partner and ask them to read it, right? And double check it, because emails matter, things matter. These are important, right? Spelling matters, words matter. I tell this to my kids all the time. So learn. So what Gabriel said, if you're not out networking, and while you're networking, and if you're an Oregon OEN, right? If you're not
Yep.
at these meetings, and Rick does a great job, Rick
Yep.
over at
Rick.
Pi,
Yep. Rick
right?
Strozzi.
And all these people, it's incredible. I'm old. I have been an incredibly lucky and fortunate and successful entrepreneur. Yesterday, I was down seeing Stacy at PSU, learning from her.
Oh yeah.
Hey,
Yep.
Stacy, how do you structure this, right? And she's great. There are people in your community that are resources. So the old adage is important here, which is, never pass up an opportunity to be quiet and listen, right? Never pass up an opportunity to ask somebody questions about how they do things. I promise you, you're going to learn things. And I'm going to add to it as well. I'm going to give a reading recommendation. My top book of the year was the Code of the Extraordinary Mind. And it's a fantastic book that is about an entrepreneurial journey. It This particular entrepreneur happens to have landed at the highest of the highs, and been to parties on Richard Branson's island. So there's a little name dropping and all that kind of fun stuff in there. I learned a lot from that. I rarely read books twice, but that's my recommendation of the year. And I encourage you to you don't even have to pick up a copy. You can go to the library now and get one for free.
It's very true, folks. I actually got a library card in my wallet. Good old Beaverton Library. Shout out to you folks.
Yeah,
And
I got
you
one
know,
too, right here,
I
Gabriel.
gotta love it. I'm telling you, I love it. And thank you for the book recommendation. One thing I would also add, folks, as Adam was mentioning, is just follow up, follow up, follow up, like constantly follow up with those folks that you reached out to. It's very important. And again, learn from other people. There's so many people out there to learn from. Don't feel like you're ever above learning, because truly there's so much more to learn every day. There's something new happening every day. And right now in the history of time, there is no possible history. There's probably no point in history than right now that you can learn more than any time. And you have more information right here in this little phone than you probably ever had in your entire life. Everything you possibly you have YouTube University. You can go down YouTube and learn all sorts of things. Now, to Adam's point, though, make sure you get some cite those sources, and make sure your references are ensuring that they're providing the accurate information. So just make sure when you do go down that rabbit hole, you are identifying some very good content that is in fact fair and honest, versus to Adam's point, trying to actually get you at the end to purchase some type of service. So again, Adam, thank you again so very much. For those folks that are listening, again, this information, all of this, we'll have the Blade Works information, the Blade Snipers Works, right? Sniper Blade Works,
Sniper Blade Works. Yep. Sniper Blade
sniperbladeworks.com.
Works.
And
Dot
then we'll
com.
have mass0.us on the Shades of Entrepreneurship newsletter. So you can go ahead and subscribe by visiting the Shades of E. You can also follow us on YouTube, Instagram, Facebook, and TikTok. And this episode will actually be available a week early for our super Patreon fans. For $5 a month, you can actually get every single episode a week early on Patreon. So again, folks, thank you for listening, and have a great night.